Good to have you back. So, what's your first take on the so-called trade wars?
Well, I think it's important to first of all understand that there's about 45 to 47 countries that have a manufacturing capability which is cheaper than China's. And so the trade war with China, while it is going to create change, it's going to create change for the US, for China, and for Europe, it is not as detrimental or as epic as the mainstream media makes it to be. Entrepreneurs will adapt, and entrepreneurs will find ways to move their locations from China to other countries, which are cheaper, as I said, because China is moving into a service economy themselves. As you can see from about 2009, they have not increased their treasury holdings. They've remained the same. And the reason they're not buying more treasury is that they don't need to keep playing the hot potato game with the United States. They don't need to hold more debt and create better positions with their dollars, because they're moving into other ventures. They're becoming a middle class economy. They're going to be more than 1.6 billion people by the time you and I reach our retirement. So they're growing faster than other countries, and they're growing faster in terms of their GDP and military. So by 2025, this country will be the biggest in the world in terms of their GDP, and by 2035, they're actually going to surpass the U.S. in terms of their military budget. So we're talking about major changes that are happening in the next 15 to 17 years, and President Trump is trying to do his best, according to his business experience, and obviously according to his advisors, to prepare the U.S. for this future. Now, what I think is happening, and this is something I've been writing about recently with Wealth Research Group, is that if Donald Trump's way of making America great again is by making the dollar cheap again so that manufacturing jobs return to the U.S., I think that is a huge risk he's taking, because the U.S. should not be competing with other countries on manufacturing jobs of garments and clothing and automobiles. They should compete on quality, on high tech, on the future of high margin businesses. This is where the U.S. excels. Apple, Amazon, Intel. You're talking about technological powerhouses, and this is what the U.S. should do. If President Trump really wants to make America great again, he should survey the billionaires and the multimillionaires that have made it in America, in today's America. Self-made millionaires, should ask them what they read, what they think, and what they think we should do, and they should air these interviews to regular Americans, because Americans need to understand that they must save instead of spend. They must increase their savings to about 10% instead of 2.5%. And this will revolutionize America, because they will not be debt slaves to consumerism, but they will be able to apply their savings to other avenues. And then they should save their college money, their useless college money, for more productive activities, because it's absolutely ridiculous that the U.S. government will lend 20-year-olds $250,000 to go to college and not lend them the same amount to start businesses and do other productive activities. So if you're going to invest in the future of your country, and you're already willing to extend these loans to young people, do it in a way that is both more productive and has recourse. And so, look, overall, the trade wars have gotten out of proportions in the media, and in 2 to 3 years, nobody would mention them anymore. This is noise. Yeah. What people should focus on right now is the fact that the central banks are tightening interest rates. They're selling their treasuries, along with the biggest holder of treasuries, which is the Social Security Trust Fund. Mm-hmm. And this is the first year, 2018. The fund is going to be at a deficit, which obviously will start in 2018 and is projected to last for 75 years. So if you got the biggest holder of treasuries selling, you got the second biggest holder of treasuries, the Federal Reserve, selling, and you got the third biggest holder of treasuries, China, not buying, you have a problem. You have a problem with higher borrowing costs, and you have a problem going forward with how to finance the federal deficit, which cannot be financed by lower taxes, which is what Trump is doing. So we have a huge problem in the U.S., and in the next few years, this will dictate how the U.S. dollar will act in the world. Even if the U.S. dollar is worth about 15 to 20% less, this will not change where companies decide to put their headquarters of manufacturing. They will not move factories to the U.S., even if the dollar will be 15 to 20% cheaper. The companies and the businesses that will lead the future of the U.S. are companies and businesses that have high margin and are looking for human potential, talent. And this is what the U.S. should focus on, in my opinion. And this is where, if the U.S. has a resurgence of its middle class, this is where it will come from. Not from the post-World War II manufacturing of Detroit and Cleveland, for example, but from high-paying tech jobs. This is where the future is for the U.S. because of its curse and blessing, which is the reserve currency of the world.
Yeah, I'm inclined to agree. But there are certain things that can be done to make the world trading system a bit more equitable to the U.S. Goods from the U.S. do get discriminated against using a variety of both tariff and non-tariff barriers. And as far as that goes, anything that makes the free trade system really free, in my book, is a major plus. So, and the concept of intellectual property theft, etc., seeing that go by the wayside, no longer being a part of China's economic system. If Trump can accomplish that, then he's done a pretty solid job for sure.
I couldn't agree more. And I'll just wrap this up with a quick note. The U.S. has sold off all of its intellectual property since the 70s, and this is what really has created the devastation of its middle class and the purchasing power of the dollar when it comes to people's wages, because they haven't priced this. Multinational companies have simply taken their equity, their intellectual property, and they have trained other countries to manufacture their goods. Mm-hmm. And this was a huge mistake to venture out and for the U.S. government not to tax this exit of manufacturing from the U.S., which would have either benefited the federal government, or it would have caused companies like Nike, Gap, and the rest of these clothing companies, for example, or automobile companies that have moved all of their manufacturing outside the U.S., they would have thought twice on what to do. It's a huge debate whether or not free trade is or how to implement free trade. But in reality, what we have right now is a country that needs revitalization of its labor force. Otherwise, there will be no middle class in America by 2022. That's period.
Absolutely true. Couldn't agree with you more. Right, so moving on, cryptocurrencies. For a while, they were really booming. They were going parabolic. Now they have come much more down to earth, of course, led by Bitcoin. And are cryptos dead, or are we moving on to another period of growth?
Well, in 2017, what happened with cryptocurrencies is they moved from the fringe to the mainstream, and they attracted speculators. It reminds me of the famous story in California of two fishermen who started to spread a rumor that there are no more sardines in the oceans. And so the price of sardines started going up, and people started trading sardine cans. So about 6 months into this, all the speculators are making a killing. One person decides to open the sardine can. So he opens the can, he tastes the sardines, and then he says to his friend, "Man, these taste very, very bad. These are lousy." So the other friend tells him, No, these are not eating sardines. These are trading sardines." And so this is what happened with cryptocurrencies. People just started trading them because they look sexy and juicy. And this is not the future of them. Now, the same thing happened in the dot-com bubble. The same thing happened with many other bubbles. There are great companies and great projects in this space, but not all of it is pure gold. So, in other words, even Amazon, the great Amazon, fell by 94% when the dot-com bubble burst. But had you bought back then, you would have made a very smart investment. So don't throw the baby with the bathwater, as they say, and just understand that you need to find the good companies within the space or the good projects. Now, Bitcoin is a special project because it's a protocol and it's not just a currency, but there are many other ones that will have a future in a few years. Now, as I say this, I don't think that many of the projects that are aiming to be currencies will actually be acting as such in the future. It doesn't look like there's a big demand for currencies as of right now. So even though fiat currencies are inherently worthless, depending on the government that runs them, the need for cryptocurrencies, it's almost like cryptocurrencies are a solution looking for a problem. So we don't have mainstream adoption because merchants and people are not needing them as much as the idealists of the cryptocurrency space have thought. But that doesn't mean that the blockchain technology is in the same basket as these cryptocurrencies. So you need to really, as an investor, do deep research and find companies or projects that are actually creating solutions that save money, that bring value to their clients. And that's where investors can really, right now, with valuations being very, very attractive, make opportunities happen for themselves. I can tell you that Wealth Research Group has partnered with a company called Global Life Tech, and that company is founded by Anthony Lecavera, who had 5 successful exits in his past, including selling one of his companies for 1.6 billion Canadian or 1.3 billion US, and he just launched a company that is going to commercialize blockchain with AI, with artificial intelligence. And they're doing projects in the cryptocurrency space, they're doing projects in the blockchain space, and they're monetizing them. So this is the future, how to monetize blockchain technology, how to actually make money with it and not just develop startups, how to actually sell to consumers, either businesses or individuals, blockchain solutions. So this is, I'm giving you an example of what you should look for, companies that can actually generate a profit. Because if you're looking at the 1,500 cryptocurrencies that are out there, what are you actually holding? What do you own when you buy one of them? What do you have in your hand? And if you own a piece of business like one of my biggest positions right now in the stock market is Kimberly-Clark. What do you own when you have shares of Kimberly-Clark? You own a piece of business that has brands such as Huggies, Kotex, Kleenex. These are brands that are not going away. And when you own a company like that, what you're looking for is exceptional returns above the index. So if you can make better returns than the S&P 500 using less risk, you just created alpha. which is the elusive word for saying risk-adjusted return that is better than the index, better than the average. If you can find those companies, then you're basically a superior investor. So
Absolutely.
this is what you need to look for. And with many of the cryptocurrencies, you're not investing, you're speculating, and therefore make sure that your position sizes are according. This does not mean that you cannot make a lot of money going forward. It just means that you need to understand the risk-adjusted investment that you're taking on yourself, because these companies can shut down.
Absolutely.
If their one project doesn't work, if they're not able to finance their growth, if their co-founder or management team has falling out, these are all risks that startup companies face. These are not established companies, and it's very hard and difficult to find out and gauge the management teams unless you actually meet with them and understand their core values and what they're all about, which is why Wealth Research Group, for example, spends, I don't know, I want to say at least 2-3 months getting to know management teams of companies that we partner with.
Right. Hey, agreed there for sure. You really have to know these companies to know what your risks are and to have some glimmering of what prospects of success are. Hey, precious metals, we in the same boat as cryptos here, or are they going to come back?
Well, first of all, regarding cryptocurrencies, I think the bear market is over in general. So I think we're uptrending right now, and we will continue to uptrend. With a Wealth Research Group letter, I issued an alert, a buy alert on Bitcoin at 6,100 recently. Obviously, we've seen it above 8,000, so this has been a well-timed call. With precious metals, right now we're in no rush, not at all. If you're talking about allocating funds into the precious metals in physical form, that's one thing, because the purpose of owning precious metals in physical form is to be insured. And so you want to own it when it's obviously cheaper, because you want to buy insurance when it's cheaper. So if your purpose is to add a location to your precious metals positions in the physical form, this is a great time to do it. Yeah. My personal strategy has been to take the monthly burn rate of my life. Let's just give it a round example of $10,000 a month, and then multiply it by 24 months, so 2 years worth of my lifestyle burn income, and not income, expenses, and just convert that into physical gold and silver with an 80-20 rule, 80 being gold, 20% being silver. And so that's what I've done. And that's it. That's my position. I only rarely change it if the price is really dropping, or if the rest of my life is going very well. My businesses are going fantastic, and my burn rate is going up. So I'm increasing my lifestyle, and therefore I want to have more insurance if something goes bad in my businesses, etc. Now, so that's one front. The other front is for people who are looking to speculate with the gold equities or the mining shares in order to capitalize on the wild swings that happen. Now, since I started my Wealth Research Group, the newsletter, in early 2016, there has only been one time that both gold as the spot price and the equities have been together cheap. And that was when I started the letter. In the end of 2015, gold bottomed, and the mining shares were horribly priced. Some of them had more cash in the bank than their entire market cap. Some of them traded for less than what the founder shares were issued for. And so we were able in 2016, for example, to profile or partner with 12 companies that we issued alerts on to the subscribers, and all of them doubled, with one of them even gaining as much as 800% between January and August. Amazing. But since August 2016, we have been fighting gravity, and you just don't want to do that. There's a way to offset this risk by shorting a gold ETF in the meantime while you're dollar cost averaging, and you can limit your position sizes, use stop loss strategies. You can do many things to offset the risk you're taking, but basically we have been fighting gravity with gold shares for 2 years now, because this is August 2018. Now, we are no rush because they're cheap, they're hated, but they are not in an uptrend. That's what we're looking for. We're looking for the last seller to throw in the towel. We're looking for the bottom.
Capitulation.
The sector. Yes. And then look, Kerry, we've seen gold bull markets before. They last from anywhere from 2 to 10 years. So even if you miss the first 3-4 months of this, you're fine. Even if you're waiting for that uptrend to be confirmed, both technically, fundamentally, and everything else, you're fine. Yeah. Do not rush into this. We are definitely not in a rush when it comes to the gold sector. There's other sectors, for example, cannabis, which we are right now in a major swing up because Canada is going to legalize in about 2 months here, and that's a different story. So it just depends. Right now, with regards to gold, very good time. If you don't have enough physical gold, or you don't feel that you have enough, 2 rules of thumb here are either 2 years worth of your spending burn rate converted into precious metals, or 5% of your net worth, and that should really be a good rule of thumb for all Americans.
All right, like that. Hey, so when you deciding what companies to partner with, what is your business philosophy on that regard?
Well, the most important thing with small cap companies, as opposed to dividend aristocrats, which make up 75% of my portfolio. So just to make this clear, dividend aristocrats are companies that have been able to raise their dividend year in, year out, no matter what the interest rates are, no matter who's president, no matter what's going on in the economy, bar none. These companies are able to be more profitable, to grow, and to cut to trim their fat and keep their margins thick and consistent. And they've been able to pay shareholders increasing dividends for 25 years. There's only 52 companies in the world that have done that. So this is a very rare, select few companies, and some of them are household names. Some of them are less known. But the idea, Kerry, is that, for example, if you buy, let's say you buy one now, and it continues to increase their dividends year in and year out, this would be equivalent to you buying a $100,000 home, and the tenant now pays $1,000, and he tells you, look, every year I'll pay you 10% more for indefinitely.
Yeah,
this would be the perfect tenant. And so all you need to worry about is that the tenant can actually do that. So you need to make sure that he is financially sound. And on the flip side, you want to make sure that you're buying this house for a good price. And if you're able to do this in the stock market, meaning buying shares when they're attractive and making sure that the company is able to keep their competitive advantage over their competition, which is what allows them to increase their dividends every year, then you got a phenomenal investment that will handily beat the S&P 500 every year. And if you want more information regarding this, because this is 75% of my wealth tied up to this. This is where I made the bulk of my investments over the past 18 years. Go to wealthresearchgroup.com. On the top menu, you'll see 2 tabs. One is called Wealth Stocks, which are companies that I've actually bought myself. And one is called Dividend Mania, which will help you to become more educated about this. And the third thing that's important is in the newsletter itself. If you're a subscriber, every third Thursday of every even month. So, for example, at the third Thursday of August, I will be personally publishing my own trades and my own positions in these companies for the past rolling period of 60 days. So every 60 days, I update, and this is to create a lot of transparency, not only transparency, but to show people what I think is a value right now, because this is what the Wealth Research Group letter is about. It's about sharing the ideas and the research that I do, and this is what I'm really passionate about. Now, with regards to cannabis, obviously, these are much smaller, more concentrated positions in companies that I'm able to really sit down with management. So we're talking about companies that we're able to spend time face to face, understand them. We walk through the operations. We see the people that are behind them, because most of the risk that has to do with small cap investments is internal risk. In other words, the risk is inside the company.
Right.
And if the company can handle this risk, they can grow. Whereas for a company such as Disney, most of their problems are external.
Right.
Internally, they do not face many risks because they have proven products, a lot of customer loyalty, brand power, and they're a whole round highly trained company. So most of their threats are coming from the outside. And for small cap companies, they come from the inside. And who can handle these risks are the management. And so management is the key element in investing with small cap companies. So what I try and do is stick with legends that are proven to be serial winners. And that's where I migrate to. So we're talking about, really, Kerry, we're talking about 20 people, for example, in let's say in the gold space.
Sure.
We're talking about 15 people in the cannabis sector, which is fairly new. And so this is the underlying element. The second thing that I want to make sure with management is that they understand they need to have a very liquid stock, which will be able to finance and grow when they need to raise money. And therefore, I'm looking for management teams that believe in the power of marketing.
Yeah.
And because I've seen countless, and I'm talking hundreds of companies they're sitting on amazing ideas, but they can't pull the trigger and build a company because nobody knows about them. And so their share prices remain cheap forever. They can't finance their acquisitions or their growth, or they can't take on more debt because they're just not out there. And people don't know them, investors don't know them, and they can't raise money. This is the last thing I want. And that's why I avoid companies that do not understand the power of leveraging with marketing.
Yeah, because if nobody knows about your company, you could have the best company in the world. You could have Apple 30 years ago, but if they didn't market and if they didn't promote their stock, who knows where they would be now? Probably not where they are today. The fact is,
and Steve Jobs was a spectacular promoter of the company. Yeah,
really spectacular. So that's good. And certainly the companies that we talk about, clients, etc., are always going to fall into that category where they know they have to get their story out, and we're only interested in positive stories that have good upside. I always say there's two kinds of people who work in publicly traded companies. There are those who actually run a business, and then there are those who are in the business of selling their company's stock to the public. And you want the former and not the latter.
Sure. That's another important point. The exposure that the management team, the founders have to the upside and to the downside. So how much risk are they taking? How much skin in the game? Are they people that have high salaries and low positions in the company, or the upside, or the reverse? Do they have symbolic salaries like Buffett takes from Berkshire, for example, but on the flip side, he owns about a third of the company. So all of his motivation is to get the share price higher. And this is obviously advantageous for his investors.
Absolutely. So you got one of these stories for us that looks good in the cannabis space. Somebody that I interviewed several weeks ago, a sponsor of the show, and they're looking like they've got a good angle on the cannabis market.
So I'm assuming you're talking about Pure Global Cannabis, which just hit a fresh all-time high yesterday of 38 cents Canadian. And if you are, I can definitely share what I saw in the company and why I'm invested big time with them. The first thing is Malai Panchal, who you interviewed. I'm assuming the CEO and the founder.
Yes.
The guy, this person is really top-notch and highly educated in the cannabis sector, but even more importantly, he's highly educated on what needs to happen with his company to make it a success. Mm-hmm. And the fact that he is looking to create brands is important because cannabis is a commodity. You can grow cannabis anywhere. The problem is not cultivation. The problem is how you can market your product to the consumer so he appreciates the quality. This is the difference between a regular diamond store and Tiffany's. Both are selling diamonds and gold and silver, but Tiffany's is one of the top 10 highest margin companies in the world. Mm-hmm. And so they've been able to convince consumers that what they have is better. Now, with cannabis, you can actually not only brand that you're better, but you can actually be better if you can control the process from start to finish and deliver value on the cultivation side, on many of the agricultural secrets and commercial secrets that you can develop. And that is what this company is doing. They have a proprietary system called a multiponic. Not going to get into it, but definitely you can go to wealthresearchgroup.com/pure and look at it. And you can go even to the company's presentation and understand it. Call the company even if you're really serious about this. The amazing chain that they've been able to produce is what makes me believe that they will be one of the first medical grade companies, because they're one of the 36 companies that have a medical license from the Canadian government to actually sell medical grade. And this is important. There's only 36 companies that are out there that are doing it, and they're the fourth cheapest one out of those 36. Their market cap is about 95% cheaper than the average of this of these 36 companies, and this is because they just gone public, so literally under the radar. But just to kind of wrap this up, I think Malai is going to be able to make the company one of the first exporters of cannabis out of Canada. And this is definitely a game changer, becoming a global company. Sure. They've just hired a global supply chain manager for their operations. And so in Q1 of 2019, their facility will be ready. And I think that will really get the market to understand the value completely. And this is definitely one of my top positions in the cannabis sector.
Hey, I couldn't agree with you more. The CEO interviewed him, sponsor of the show, phenomenal guy. He's a pharmacist. He's not like a financial or lawyer type that got into it. Not that that necessarily means anything, but he's got a feel for the pharmacy chain of distribution. And for now, Pure is going to be a medical-based cannabis company. And there's just not going to be the margins there. You're not going to be subjected to the commodification as much as you will in the other general cannabis market. All good things ahead. Hey, so we find you at wealthresearchgroup.com. And hey, how do we get this report on Pure?
You can go to wealthresearchgroup.com/pure. And you can download our report. Look, we've done about 108 days of research on this company when they were even private. And this is one of our biggest themes this year. 2016, our major theme was precious metals. 2017, Wealth Research Group was the first newsletter in the world to call Ethereum a huge game changer at $12 per coin. I have a few subscribers who have put a few $1,000s in it, and obviously with a 90-fold return. I have one subscriber who actually emailed me that he has become a crypto millionaire. So 2017 was definitely the year of crypto. 2018, with the coming legalization of cannabis, we're definitely going to be looking at people that are going to be pot millionaires with regards to their investments. And this is one of the best times to look at pot companies, because once Canada becomes fully legalized, you're going to see a drove of tourism. You're going to see a drove of companies going in there because they can build their R&D, their research and development centers there. You're going to see a flock of brain power going into Canada. And if I'm President Trump, I'm going to approve either the States Act, which basically do away with federal legalization without actually announcing it, because the States Act basically says that you can't enforce any law regarding cannabis to any state that has decided to legalize it. So it basically moves the federal government out of the picture. But I